Darren, in the last couple of years, U.S. equities have outperformed international equities, but in 2017, we're seeing the tables turn a little bit. Can you talk about the international equity outperformance this year, and is that sustainable?
Sure, Nicole. You're correct. U.S. stocks have done quite well in the prior years, primarily because earnings were better here than they were on the international side. So now we're seeing a little bit of a pendulum shift where interest rates are low in Europe, they're low in Japan, there's some stimulus in the market in the United States. We're actually starting to raise rates a little bit and maybe tap the brakes. So from a standpoint of where we are in the cycle, international equities are probably poised to have a little bit longer performance than where we are on the U.S. side. And there's also been some great developments. Europe is really picking up. Unemployment rate is down. Consumer confidence is at a 10-year high. Earnings were up 15% in the first quarter for European stocks. We're seeing growth in Japan, which was actually the fastest growing market, 2.2% of the developed countries. And really just an overall momentum shift where investors are now starting to refocus back on international equities because earnings are trending higher. We also saw the European vote in France when Macron was elected, which means France will stay in the Eurozone. That solidified that region, that helped. We've seen the currency appreciate. We've seen several things that I think are bode well for the region. Emerging markets also continue to do well. Asia is on fire right now, and the consumer is growing and spending more, and exports are picking up. Currencies have stabilized. So there's really a lot of positive developments on the international side. So I would anticipate we're going to continue to see outperformance from international stocks going forward.
Thanks, Darren.